Hey there, traders. Todd Gordon here of tradinganalysis.com. This is more than you probably needed or wanted to know about the state of the XLK technology sector spider, according to the world of Elliott, but it's really important to at least get the gist of what I'm saying so you know where we are. Are we in an uptrend? A new bull market that started in October, or is this a corrective rally set to fail? That is the question that we're going to look at here quickly. First, before we get into tech, let's just acknowledge the S&P broke above the February 2nd high of 41.95. That's the Groundhog's Day. We're going to focus on tech, but let's give a big shout out here to the S&P for breaking 41.95. That leaves a potential five-wave move off the lows since October, and five-wave moves don't happen counter to the trend. Said otherwise, five-wave moves happen in the direction of the trend, which would suggest that we are in fact up. Okay, let's get back to XLK. That's really where the action is here with the big move in technology semis with this AI boom. Now, first thing I want to do, we're going to look at a couple different wave counts. Okay, we never go into battle with one game plan. Okay, we always have a backup plan. I never go into a trade or an investment with one trade plan. Okay, because more times than not, things go wrong, you know, in life and war and trading and investing, and you have to have backup plans, contingency plans to mitigate risk and move forward a new direction and try to make gains that way. So that's the way we approach. We're not analysts, we're traders and investors, and we use Elliott Wave that way. So we're gonna look at a few different wave counts here and try to put the puzzle together. Now, this is XLK on the daily, okay? Now, a lot of people are still very bearish on the market, and following the news flow, I get it, right? So a bearish interpretation of XLK is this: five waves down from very late 21, followed by A, B, C correction in B, okay? Now, let's just start right there. Now, the 78.6% retracement, that is the square root of your golden ratio. So you take 0.618 in your calculator, hit square root, you'll get 0.786. This is what we call the retracement of last resort. If you do not hold this resistance level as a retracement, you're likely not in a retracement anymore. You're in a new uptrend. What breaks the 786 usually goes to the 1272. Okay, 1272 is the square root of 1.618. Okay, you guys all know that. Now, as we get inside of this B wave, right? So keep that in mind. If you break above 786, which that is looking up close about 161, chances are you're going to new highs. On top of that, which is interesting, if we are in an ABC correction here in XLK, okay, let's take a look at wave C, which is 1, 2, 3, 4, and 5. Okay, now, in any good five-wave move, wave 3 can never be the shortest wave of waves 1, 3, and 5. That is an unbreakable rule. What you'll see right here is wave 3 is 61% of wave 1. So 3 is shorter than 1. That means 5 must be shorter than 3, else this is not a valid wave count. And that point at which 5 is longer than 3 is at 100% at 162.63. Remember, the 786 is at 160 and change. So you have a very important zone here. You can pop above by a couple, quarters or whatever above 786. But if you break above 162.63, this five-wave move is not valid because wave 3 is the shortest. So where does that leave us? One, likely not in a correction to the new downtrend. It suggests we're in an uptrend. Okay, let's go over to this count. We've been operating on this bullish count as our primary wake up, but there's a problem with this one as well. So this one has the 21 down to 22 is A, back up in B, in summer 22, down in C in October of 22. Okay, now same thing, 1, 2, 3, 4, 5, potentially a five-wave move in the new uptrend. Can this work? Well, same situation, okay? Take the distance of 1, compare it to 3. Here's your 100% 3v1. We have wave 3 shorter than 1, so the same thing happens again. If 5 is longer than 3, That leaves 3 shorter than both 1 and 5. This can't be a valid count. That's going to happen right here at the 100% 5E3. If you get above 160.47, wave 3 is left as the shortest wave in waves 1, 3, and 5. That's not good either. So where does that leave us? Well, it leaves us in a pretty bullish situation. Okay, now this is the count that we've been looking at for a while. There's several ways I can back this up, but quickly, it's possible from an Elliott wave point of view that it's A, B, C for W, connector X, A, B, C, truncated, abbreviated C of Y, and in fact, the correction ended here in January. Okay, that leaves us as 1, 2, small degree 1, 2. That takes us through the 61% retracement off the all-time highs, through that 160, 162. And at that point, you're probably looking at new highs in the market. Okay, we have a count that matches up here in the S&P, but again, let's give it up to the SPX for breaking the Groundhog's Day, making 5 waves off the October low. However, I don't think that 5-wave move, the point of this, is going to last. We need to break it down and allow for more bearish movements. The other thing I would say, it was very interesting, stocks were able to break out today with bond yields, which if you've been following here on YouTube, we've been focusing on quite a bit. Bond yields broke to up towards the upper end of the range, and stocks handled it very, very well. I think that's very telling of the strength of this market. Anytime you saw the 10-year yield up against 3.536 here, let's take a look. Anytime you saw the 10-year yield up against 3.536, stocks sold off. Not today. So pretty interesting out there. Hope that helps. Probably more than you ever needed or wanted to know about Elliott Wave and technology, but really important to get context and position your portfolios accordingly. We have been adding long positions, put cash to work on the sidelines. I have the wealth management. We've been pretty steadfast on the bullish side, and looks like so far it's right. All right, hope that helps, guys. Have a great rest of your night. Click thumbs up if you don't mind. We'll see you in the next video update. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.